updates. As usual, brought to you by the Actions to Wealth team. And my name's Geoff Pyne. I'm coming to you from Tasmania, Australia. And it's wonderful to have your company. Thank you for being here. Well, sometimes as a technical trader, I have to close my eyes and open my ears. Today, I think, is one of those days where my analysis really must start with the fundamentals that are going on around the world due to really the escalation in the conflict in the Middle East, in particular Iran's participation in that. What is concerning about that, of course, is it's going to escalate the conflict potentially. We've been hearing about this for some time, this potential intervention by Iran. And I wonder, is this really going to be a pricing event where we've really expected this to happen, and here we are? Or is it, oh my God, here's Iran in the event or in the conflict, and it's news? Is it news? I don't know. Look, I'm far from an economist. In fact, I'm definitely no economist, and I'm certainly no fundamental expert. Rather, I ask myself the question, can the fundamental history tell me technically what's about to happen? So I want to investigate that today, and I want to have a little bit of a look at where we can find that information. The first thing I'm going to do is look back at maybe the most recent similar event, which to my mind would be the Russian invasion of Ukraine. We have a date for that, so we can go back and have a look at what happened when Russia actually did invade Ukraine. So let's do that. I'm going to use a few parameters here or asset classes to make my point. The first of them is going to be gold. Now, gold, as we all know, has been on a tear for, well, there we are, 1, 2, 3, 4, 5, 6 weeks now. Came off its highs last week, no question, but you would expect that, I would think. But that's not my point. My point is this. Here's the week, I think it was February 24th, if I'm not wrong, that Russia invaded Ukraine. And what happened to gold? Gold, the 24th, where's that? That's the 20th, right? So that's the week of the 20th. Subsequent week, gold rallied and rallied substantially until it hit this. I could probably go a little bit wider there, until it hit this top of the range here, which is all-time highs, I've got to say, at that point. Came off that dramatically in a matter of 1-2 weeks' time. So war, gold rallied, went to all-time highs and plummeted back to the former support level. Interesting. So initial reaction was buy gold. Considered reaction a couple of weeks later, sell gold like there's no tomorrow. Interesting. The next one I want to look at is the NASDAQ, the tech stocks. So not dissimilar in that we had a rally, but a very, very short-lived one, and then price plummeted amazingly through the previous support level and found a base like 9 months later or 6 months, 7 months later in September. And since then, well, you know what happened since then. The next one I want to look at is the S&P 500, which did a dissimilar thing in that it sold off immediately, then rallied for 1-2 weeks, maybe even 3 weeks, came off its highs, and then tanked. Are you getting the correlation here? Because frankly, I'm struggling to get the correlation. What I am seeing is an immediate reaction followed by a subsequent reaction, which appears to be in a different direction. Where will we go from here? Let's have a look at oil. No, let's have a look at the dollar index first. Well, the dollar index was already on a tear at the top. Well, it was trending. I won't say it was on a tear. It was trending, certainly. And the news of Russia's incursion into Ukraine did absolutely nothing to stop that. And I think this is my takeaway. Nothing stopped the US dollar from rallying at that time. Went into a very, very strong trend until it hit, well, 115 odd here. 9 months, no, 7 months later. Then it settled down a little bit. But here's my takeaway. This is the strongest reaction, in my humble opinion, from that incursion of Russia into Ukraine. Is that relevant? As I said, I'm no economist, I'm no fundamentalist, but to me, it's the most recent thing that I can compare from a fundamental / technical point of view. So the fundamentals have led me to a point where I have a look at the technicals and what happened as a result of that fundamental occurrence back in 2022. And this is the strongest reaction that I've seen, dollar strength. Interesting. Let's look at oil. In 2022, not dissimilar to what we've seen. Here's the week that Ukraine was invaded by Russia, skyrocketed, absolutely went ballistic. Remembering that was still in an uptrend at the time, similar to the US dollar. Absolutely went ballistic for a week and a half and then came off, rallied again, but that lower high sent prices down, 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 down. Now, oil, pardon me, is once again in an uptrend, and we've got that threat of escalating conflict. Interesting. Conventional wisdom would probably dictate that because Iran in particular entering this conflict, we're going to have a situation where oil will rally. Like I said, I'm no economist, I'm no fundamentalist, but common sense or logic tells me that oil is going to rally on the back of this should the world or the markets decide that Iran is indeed serious about creating a new partner, if you like, for the Palestinians in this conflict. I'm struggling with that, frankly. I'm really struggling with that. But here's what I see technically. And if fundamentals marry technicals, and they do, this is what I'm seeing. So oil to rally, dollar to rally, perhaps, or continue the rally. Then I have a look at the currencies. And the currencies, traditionally you'll see a flight to safety will involve currencies like the yen, currencies like the Swissy franc, both of which are deemed to be safe haven currencies. But then again, so is the US dollar. So if the US dollar is going to strengthen on the back of a conflict as a safe haven play, then isn't that what we've already seen in these charts? Answer to me is yes. Oil, of course, against the US dollar, somewhat conflicting with that, but you can see the US dollar took over only some couple of months later, certainly against oil and against most other asset classes. So conclusion, well, I'm not quite to a conclusion yet, but I think the US dollar is looking pretty good as far as I can see. Let's go with the currencies. I'm going to look at the relative strength of the currencies. I'm looking at their indexes now. And the first thing I look at, obviously, is the dollar index. And if you have a look at this side panel over here that I've got, you've got the dollar index changing by 0.7%. Certainly that's the indication that you're getting from last week's candle. But everything else against the dollar is weak, not surprisingly, given what we've just discussed. The chart technically is telling me that in spades, and we've been following this for some time. If you're in the slingshot group, which a lot of you won't be, but we've been following this for quite some time. And I won't say we predicted this, but technically we were seeing that we'd broken out of this range being the pennant that you're seeing on your chart. And we retested once we got out of that. And this was technically going to happen based on that break retest, or A, B, C scenario, if you like. So that has fulfilled its potential to this point. It's at a resistance level, however, which is throwing an absolute spanner in the works, and doesn't really give you a whole lot of confidence in buying this at its high. Not that I'm a fan of that in any case. But what is relevant here is that this is strong. The dollar's strong, without question, has broken through that resistance level and now finds itself at minor resistance as well. Do we expect a little pullback? Probably we do from a technical point of view, but from a fundamental point of view, if this Iran situation is actually playing out in a major way, then I'm not sure we're going to see one. And that's our challenge, right? That's our challenge as to, okay, do we buy this now or do we wait for a retracement? Well, my thought process is let's get away from this high in case there's a fake out, and then look for something a little bit further above that level if we're thinking dollar strength is going to continue. Well, let's find out what's the best currency to trade, if you like, against the US dollar. Is it going to be the euro? You would expect an upside down version of the dollar index when looking at the euro, and that's exactly what we've got. We broke out to the low side, we retested that that support trend line, and now we're on a very, very strong path to lower prices. Yet we are at a support level. So what would I expect from that? Technically, I would expect a bounce producing a lower high, and I'd like to trade it short. Fundamentally, are we going to get that opportunity? I have no idea. The market will tell us that potentially as early as tomorrow. But you can see that the euro is weak right now. Aussie's a little bit different. Because it's a commodity-based currency, it hasn't really sold off to the extent that maybe the euro, well, okay, last week's bar is absolutely decisively bearish, without question. It's a bearish engulfing bar. But look what preceded that. The support level that was rejected very, very strongly, twice in the space of about 6 weeks. These bars are absolutely telling from a technical point of view. They're saying, do not go short here right now, go long. And I have to be in agreement with that from a technical point of view. The thing that is probably holding the Aussie at the moment is the gold price. I'm not sure you're aware that Australia actually is a producer of, I think, the second biggest producer of gold on the planet, or equal with China maybe, but it's up there. So, you know, if gold's rallying, then the Australian dollar is in favour. So that's conflicting whether or not we suspect that the fundamental situation is going to result in a safe haven play, because traditionally safe havens are not the Aussie, certainly not the Kiwi or the CAD. They're risk off currencies. Oh, sorry, the risk on currencies. Always get that flipped around. So this being a risk off currency, a risk on currency, this being a risk on currency, it does tend to suggest that it would weaken. Yet, to my mind, the price of gold is going to hold that up just a little bit. Follow me. I'm getting to a conclusion here. What I'm saying is the Comdols, Australian dollar, New Zealand dollar, Canadian dollar, have all got a part to play in this risk-off scenario. And Aussie is going to be supported by gold. The Canadian dollar is going to be supported by oil. And if both of those rally, then guess where that leaves the Kiwi? That leaves the Kiwi, to my mind, in a very, very vulnerable position. So that's where I'm going with this. And as we go through these currencies, the indexes, I think you'll find that we can come to a conclusion on that. So the conclusion I'm coming to on the Aussie is, yes, we had a bad week last week, but there's a very, very strong rejection of this level here around about the 65 cent mark. So I'm thinking Aussie is still going to here to around about the 67.5 mark. So I'm a bull on the Aussie with, I'd have to say, due deference to the war situation. So it's a risk on currency, sorry. The market goes risk off, you would expect the Aussie to fall. I'm not saying it won't, certainly against the dollar. What I am saying is it may well remain strong against something like the Kiwi, which doesn't have the same resources, if you like, that the world would be seeking. And here we are. Here's the Kiwi. The Kiwi is on a downward spiral, nearly at support in the trade line or trend line here, but not quite there yet. I don't see anything here that's telling me that the Kiwi is going to rally until it gets to here. Not even rally, maybe even just pause here at this support level. There's no strong horizontal level here supporting the Kiwi. So I'm thinking the Kiwi with the big similar reversal bar to the Aussie last week, but I don't see any upside for the Kiwi at the moment. Don't see anything supporting it until it gets to this trend line. Got a question in the chat. Gold price will help to push Aussie up. Yeah, absolutely, Robert. Yes. That's part of my point. If the Aussie, if gold remains strong, then so should the Aussie. Certainly against comparable currencies like the CAD, like the Kiwi. Not against the US dollar, because the US dollar, to my mind, will outperform just about every other currency because of the potential for this conflict to escalate. So you've got to pick your poison, if you like. You've got to go, okay, yes, the Aussie can be strong because of gold, but what's it going to be strong against? And to my mind, the Kiwi is the big target. So I'm massive bull Aussie Kiwi at the moment. Not just because of the fundamental scenario, but because the technicals are telling me that as well. Kiwi's got a little bit to go before it hits support. Aussie has already rejected support. Let's go to the yen. Yen is a very, very strong recognized risk off currency, where if the market goes risk off, then generally you'll see the yen rally. We've also had an interest rate flip around by the Bank of Japan. So the only currency currently raising interest rates, or the only country currently raising interest rates, is Japan. Yet the weakness continues, as shown here. We've just we've just plummeted through the very, very strong support level on the yen index. Whether that takes into consideration the current situation with Iran entering the conflict is debatable. And really, I don't want to dwell on that because I'm not a fundamentalist. But if we don't take that into consideration, you're making a mistake, in my humble opinion. It has to be considered under these circumstances. So the yen, although it has broken support, fundamentally it potentially will rally. But I've got to go with my technical analysis, and my technical analysis says the yen is still weak. So I wouldn't be wanting to place anything bullish the yen right now. I'd prefer to be bullish the yen than I would the Kiwi. That said, Canadian dollar, which is also very interesting. Canadian dollar looks as though it's approaching support, but not there yet. If you go back to those comparisons that I made back in February 2022, that said what you would expect to happen actually happened. In other words, we went risk off, but we went a little bit further risk on before we went risk off. That's interesting. And I think I can compare that to the CAD. The CAD goes to support before it rallies on the back of oil, perhaps. That's what's in my head. So I'm not discounting that the CAD can go to support this week. I am discounting that it won't rally, because I think it can, perhaps on the back of oil, if the conflict escalates. So I'm thinking, okay, down here with the CAD, but this is a buying area for the CAD. And that's where I'm going with that. So maybe limit orders on CAD versus Kiwi. Maybe limit orders on CAD versus the euro versus the pound. So let it slip a little bit, find the support, then be a buyer. The Swissy's been on a bit of a downtrend since the amazing run that it's had. And it is an amazing run. It's been going for a long, long time as the most bullish currency on the planet, pretty much. You can see now that it's come off those highs, and not only that, it's broken support. It is at a horizontal level of support right now, which makes it interesting, because tie that up with the fundamental situation. If the market does go risk off, which it appears that it is, given that we've seen things like the indices take a little bit of a dive late in the week last week, and it appears that that is the flavour of the month at the moment, probably because of the conflict. But that's what I see here on the Swiss franc. It has breached this long-term support level, and I expect that we'll see further downside against the risk on currencies. But does that mean we buy it? Leave me out. I think this one's a tough one. I think the Swissy is probably the toughest of the lot, because it has been on such a tear to the downside, or not really a waterfall, but it's certainly been trending down and has broken support. Yet the conflict may support it. I want to stay out of that one. The pound, again, we've been following this one, and this looked technically perfect as we broke above this level, came back below it, retested it, and that was a clear sign that this would find, or look to find, its most recent support level, which to my mind is the bottom of this pennant. That appears to be happening, so I'm definitely a bear the pound, and for that reason I'm thinking pound dollar short. I'm thinking everything against the dollar short, with the possible exception, I don't want to trade the Aussie, don't want to trade the CAD short at all, because of the scenario that we have with gold and we have with oil. Oil will support the CAD, gold will support the Aussie. So not against the dollar so much, but against everything else. I think that's fair. Robert, euro yen. I'm thinking you're asking me, is euro yen potentially a sell? If that's the case, then yes, I'm on board with that. Do I think it's a setup at the moment? No, because let's go back to where I started, and back to where I started was looking at things like these. Yes, sure. These things that went up before they went down, and that to me is quite remarkable. Gold in particular went up and then it went down as a result of that war incursion of Russia into Ukraine. I really don't want to stick with those technicals, guys, or those fundamentals, because I'm not qualified to do that. But to me, it's logic, and logic leads me back to the technical scenario. What actually happened when Russia invaded Ukraine? Because to me, this is somewhat similar. Not the same, but somewhat similar. So where does that leave me? That leaves me with a couple of things. Leaves me with, sorry, I'm already in that trade. I can't quite remember where my analysis is. There it is. Okay, leaves me with things like Kiwi CAD. Went through the CAD. CAD's going to be potentially buoyed by oil. Kiwi doesn't have those credentials. Kiwi has been weak recently. CAD, a little bit up and down, but I think it's got far better credentials at this point than does the Kiwi. So therefore, on a weekly basis, I think this candle, which is a key reversal bar, something that I call the game changer bar, I think it's eminently tradable. I think if you could put an entry, maybe not underneath the candle, but underneath the pivots and underneath this swing, which is more important. So an entry round about here somewhere, let's say around about 81.30, 81.35, somewhere in that vicinity. I think you can put your stop loss above the candle, which could become a swing, could become a lower high. If you're really conservative, you can go up to there or there, but I think that would be sufficient, because if you're wrong, you're going to be wrong here anyway. So I think an entry under there, Kiwi CAD, may produce a reasonable result. Same could be said about Aussie Kiwi. Let's have a look at that one. Aussie Kiwi on the weekly chart. Why am I looking at the weekly chart? Well, because it gives me a directional bias. That's why. We haven't had a retest of this breakout area, which is somewhat concerning. And again, goes to the theory, or goes to the theme. Do we have a sell-off before we have a rally? Good question. Don't know the answer to that until tomorrow, or maybe even Tuesday or Wednesday. But to me, this is a buy. I would love to see it down here, there's no question. But I think if you bought above the high here, I don't think you go too far wrong. Maybe get your stop loss underneath here, because I think Aussie Kiwi has a far better credential. Or sorry, Aussie has a far better credential than the Kiwi this week. Other things to consider. Well, I can give you a whole bunch of scenarios that may or may not play out. The reality is tomorrow the market's going to open in a different place than it closed on Friday. And that's what we have to weigh up. And I think those potential moves, which will be potentially gut reactions as a result of Iran's conflict or entry into the fray, if you like, may well be followed through. The problem with that is, in such cases as Aussie versus the Kiwi, if this opens up here, is that a good place to buy? And the answer is no, it's not, to my mind anyway. Yes, Kiwi CAD short, 100%. I'm on board with that. But please listen to what I'm saying now. The market could well open in a very, very different place to what it closed on Friday, which means that there's going to be, or potentially, massive gaps in the market, in particular in the direction that I'm talking about. If, however, we get price closing against the direction I'm talking about, yes, please, that's exactly what I'll be looking for. So if the market would open down here on Aussie versus the Kiwi, and I think, you know, pigs might fly, frankly, but you never know. If that were to be the case, I think that provides us with an excellent buying opportunity. Excellent buying opportunity. And the same could be said for Kiwi CAD short. Let me go back there. So Kiwi CAD short, if Kiwi CAD was to gap up, and I've got no idea why that would be the case, but if it were, then that's giving us an excellent opportunity to trade underneath this candle and put our stop loss above it. That's precisely what the whole point of this exercise today was to say, that if the market, for some reason or other, goes in the opposite direction to A, conventional wisdom, and B, technical analysis, that gives us that provides us with an excellent opportunity to trade in the direction of conventional wisdom as a result of the fundamentals. If they combine with the technicals, happy days. So I think we've got extremely good opportunity to make some cash here in the next couple of weeks. Catherine, great comparison. Thanks, Geoff. With Ukraine reference, help me clarify what I think also. Oil is the common factor, but Iran is far smaller producer than Russia, close to China's production level. Yeah, Catherine, I'm not sure it's the same thing. I really am not. But to me, it's the most logical process that I can go through to ascertain what to do this week upcoming, is to go back and look at the most recent history of what or how the market reacted in such circumstances. And what I mean by such circumstances is not necessarily the gravity of the conflict. What the conflict does, and the escalation of the conflict does, is put uncertainty into the market. And when the market's uncertain, you can, I was going to say guarantee, you can't guarantee anything. What you can do is you can look at history, and when uncertainty comes into the market, what happens is the market goes terrified. So it gets out of assets like stocks, and it buys assets like gold, like yen, like Swiss. Okay. So if you can follow that theme from history, then I think you'll probably be on the right side of the ledger come the end of the week. Iran launched retaliatory on Israel with hundreds of drones and missiles. They certainly did, Robert, and that is the issue that confronts us tomorrow morning with what's going to happen in the market. Got a funny feeling we'll see big gaps tomorrow morning. Guys, with that, I must leave you, and thank you for your company. I hope it's been somewhat revealing. As I say, I'm no fundamentalist, but the technicals seem to be lining up nicely with what happened last time. Unable to understand how yen is considered an asset. Not saying it's an asset. What I am saying, traditionally and historically, it has been a safe haven play. What I would absolutely recommend you do is Google that. Yen as a safe haven play, and go through that process of learning why. Guys, have a great week ahead. Paul P, yes, a wonderful peaceful resolution would be great. And we all are looking forward to that. In the meantime, it's going to be a hell of a week. Have a great one, guys, and take care. Bye-bye.